Hey everyone, let's face it, getting started in crypto can feel like stepping into a casino in Vegas. Everywhere you look, there's a new game, a new strategy, and honestly, it's pretty easy to get caught up in the hype and make some risky bets. That's why, in this video, we're going to break it down, keep it simple, and show you how to build a strategic crypto portfolio, even if you're only starting with $500. Listen, I'm a firm believer that you don't need a ton of money to start investing, whether it's real estate or digital assets. What you need is a solid plan. So, we're going to walk you through a beginner-friendly strategy that balances safety, growth potential, and even some opportunities to learn and experiment along the way. We're talking about diversifying your portfolio, exploring passive income streams, and even dipping your toes into the world of decentralized finance or DeFi. By the end of this video, you'll have a clear roadmap to start your crypto journey the right way. Before you even think about buying your first Bitcoin or Ethereum, we need to talk about your goals. Just like with any investment, your strategy with crypto should align with what you're trying to achieve. Are you in it for the long haul, hoping to ride the wave of adoption and see significant growth over the next 5, 10, maybe even 20 years? Or are you more interested in potentially generating some passive income, putting your money to work and earning rewards even while you sleep? Maybe you're here for the potential quick wins, looking to capitalize on market swings and try your hand at some active trading. There's no right or wrong answer here. And in fact, a balanced approach often makes the most sense. For the purpose of this $500 portfolio, we're going to aim for a mix of these goals, allocating 70% for long-term growth, 20% for passive income, and 10% for some hands-on learning and maybe a little bit of calculated risk. Remember, your personal risk tolerance, financial situation, and investment timeline will all play a role in shaping your own unique strategy. But this 70/20/10 split is a great starting point, allowing you to dip your toes into different aspects of the crypto world without going all in on any one strategy. Alright, let's break down how to allocate your $500 based on that 70/20/10 split we talked about. Remember, this is just a starting point, and you can always adjust it based on your own research and risk appetite. First up, the 70% dedicated to long-term growth, which comes out to $350. This is where you want to focus on what I call the blue-chip cryptocurrencies, the ones with established track records, strong communities, and real-world utility. Think of it like investing in the FAANG stocks of the crypto world. I'm talking about Bitcoin, the OG cryptocurrency, Ethereum, the king of smart contracts, and DeFi. And then you can diversify further with smaller amounts in projects like XRP and Cardano. Remember, this is a long-term hold, so don't panic sell if the market experiences some short-term volatility. Next, let's allocate that 20% for passive income, which is about $100. This is where things get interesting. You can explore staking your crypto, which is essentially locking it up to help secure the network and earning rewards in return. Good options for staking include Cardano, Cosmos, or even exploring decentralized finance platforms like PulseX. Finally, that last 10% or $50 is your playground for learning and experimenting. This is where you can explore smaller market cap altcoins that you believe have potential or dive deeper into the world of DeFi. Just remember, this is high-risk, high-reward territory, so only invest what you can afford to lose. Now that you've got your game plan, let's talk about how to actually put this into action. The first step is choosing a reputable cryptocurrency exchange. Think of this like picking your stockbroker, but for crypto. Look for platforms with low fees, a user-friendly interface, and strong security measures. Once you've chosen your exchange and completed their verification process, it's time to fund your account and start buying your chosen cryptocurrencies. Most exchanges make this process pretty straightforward, allowing you to link your bank account or debit card to make purchases. Now that you own some crypto, if you're planning on staking for passive income, you'll need to research how to do so on your chosen platform or with your chosen cryptocurrency. Some exchanges offer built-in staking services, making it extremely easy to participate. Finally, if you're dipping your toes into those higher-risk altcoins or DeFi platforms, remember to do your research. Understand the project, its goals, its team, and most importantly, its risks before investing any amount of money. Alright, we've covered how to build your portfolio, but none of that matters if you don't prioritize security. This is your hard-earned money we're talking about, and the last thing you want is to get hacked and lose it all. First and foremost, enable two-factor authentication, or 2FA, on all of your accounts. This adds an extra layer of security, requiring a unique code from your phone or email in addition to your password to log in. Next, consider using a non-custodial wallet to store your crypto, especially as your portfolio grows. This gives you complete control over your assets, since you hold the private keys. Think of it like the difference between storing your money in a bank versus a safe in your own home. Finally, if you're serious about security, and especially if you decide to invest more heavily in crypto down the road, look into getting a hardware wallet. These are physical devices that store your private keys offline, providing the highest level of protection against hacking and theft. Remember, in the world of crypto, you are your own bank. Take security seriously, do your research, and always stay vigilant. So there you have it, a simple, actionable plan to turn $500 into a smart and diversified crypto portfolio. Remember, investing in crypto can be a roller coaster, with highs and lows that will test your patience. But by starting small, diversifying your investments, and focusing on long-term growth, you can weather the storms and potentially reap the rewards of this exciting asset class. Remember, the key to successful crypto investing is to stay informed, do your own research, and never invest more than you can afford to lose. Cryptocurrency is still a relatively new and evolving space, and it's important to approach it with a level head and a healthy dose of caution. But by taking a strategic approach, you can set yourself up for success in the exciting world of digital assets. Happy investing!